We've come to the end of another trading week, but what's in store for markets next week? Joining me now to discuss the week ahead for the currency markets in particular is John J. Hardy, Head of FX Strategy at Saxo Bank in London. John, nice to have you on DukascopyTV. Now again, there's a host of important economic indicators on the US next week, including first quarter GDP, and the Federal Open Market Committee meet to decide on interest rates for April. What's your view, John, on the direction of the US economy right now and the Federal Reserve's policy to keep rates low until late 2014, despite moderate improvement in the US economy?
It's been very interesting, this whole debate on how well the U.S. economy is doing. There's the school out there, and I tend to believe them to a certain degree, that says that a lot of this data we've seen over the last 2 months has been driven, or some of the strength in that data has been driven by some very favorable weather conditions. Weather's a big factor, and of course the northern regions in the U.S., and we've had a very, very mild winter. So I think the next couple of months are really going to show us whether that has been the case and we see some weaker data, or whether the strength is actually there in the U.S. economy. And as well, that even stretches in terms of the seasonal factors. We've had a couple of very weak jobless claims numbers. Is this a whole Easter effect, or are we in fact starting to trend the wrong way again, the jobless claims? We haven't really seen that weakening development in the job market and some of the other indicators like some of the surveys, ISM, non-manufacturing ISM, et cetera. So, but still a question mark. And I think the next couple of batches of rounds of data here for April and May are going to be very interesting for direction on the U.S. economy.
Overseas, in the UK, first quarter gross domestic product data will also most likely be dominating headlines. When do you see a more sustainable recovery taking hold in the UK, and what about business and consumer confidence?
I'm not too enthused about the UK economy. We have a very weak mainland Europe economy here, with the crisis ongoing and getting more aggravated by the day, it seems, across Europe. As well, we're seeing the Bank of England starting to fret low productivity growth, fret inflation, and whether it's going to be hanging around longer than they originally expected. They've been willing to look through high inflation levels for so long, and now they're finally starting to fret that a bit. That means there's going to be less, all other things being equal, and if the data doesn't prove inflationary, they're going to be less inclined to continue with the massive QE programs, and this is going to eventually weigh on the economy. You've got an economy that's very dependent on the largesse of the BOE. So, really, I'm not looking at anything very good going forward from the UK economy.
While the ECB's LTRO helped fill in some cracks for the meantime, it is just a short-term fix, and the inability of peripheral European bonds to stage a durable recovery is also another concern. Spain is causing increasing tension in the markets at the moment, and there's an increasing chance of LTRO 3. But will it help?
Well, not only will it help, but will it happen? I'm not so sure that the consensus is there for a third LTRO of this long duration 3-year LTRO. I think it's going to be more likely we see this S&P, access of the S&P to buy bonds outright in the market, if we're going to see further ECB action. And then the whole question is whether the Bundesbank gets on board, because we've seen an awful lot of conflicting rhetoric from the ECB members, particularly the Bundesbank, having a typical sort of Germanic attitude that it's reluctant to see the ECB expanding its balance sheet to the degree it has. So I think there's a big problem there, and the question is where we find the next round of extend and pretend. The ECB can always go in there and act, and it could always tamp back down bond yields, but like you say, it's a short-term fix. It's a extend and pretend, and in the end we need to see a political solution, and that's where the huge question mark lies, as always, with this very awkward ECB-EU framework and the risks that the politicians can't get together and keep this thing going.
Besides some of the important data releases and events taking place next week, which we have already mentioned, what else do you see having the potential to cause a stir in the financial markets?
Well, you asked me earlier about the FOMC, and I think I spent most of my time talking about the U.S. economy. The FOMC next week, next Wednesday, very, very important there. Markets really looking to the dovish side based on a few Bernanke comments and a couple of weak data points out of the U.S. I'm wondering if it's too early for expecting too much from the QE angle out of the U.S. That's a massive one, but also very big, the French election on Sunday. It looks like we're going to be headed towards the second round. It's the first round. The second round comes in early May. Where Hollande, the socialist, will come into power, and how does this affect the Franco-German Merkozy, if you will, coalition that was so instrumental in getting the sort of the extended pretend solutions happening all along over the last few years. There's a lot of tension there based on that outcome. So a big question mark for Europe and a huge question mark on whether the market is reading the FOMC correctly. As well, we've got the Bank of Japan on next Friday, so plenty happening next week for sure.
John, thank you again. It was a pleasure speaking to you. There we have it, plenty of market releases and important rate decisions to be watching out for next week. We'll have more on the financial markets next week on DukascopyTV, but for now, have a great weekend. Goodbye.